everyone! Welcome to Invest Wisdom. In this video, we're going to talk about how does insurance work. Things you need to know. If you are new to this channel, do like and subscribe to the channel. Insurance is a contract in which a person or institution gets financial protection or compensation from an insurance provider in the form of a policy. The firm pools the risks of its customers to make payments more reasonable to the insured. Insurance policies are used to protect against the danger of large and minor financial losses resulting from damage to the insured's property or the responsibility for damage or harm to a third party. The basic premise of insurance is that one party, the insured, makes a payment to the insurer in exchange for protection against a risk that may or may not materialize in the future. When a number of people in the group take the same action to reduce the possibility of a risk happening, that risk's likelihood of occurring is distributed among the group and remains essentially constant. Insurance companies may generate revenue by determining how much more capital they need to collect in order to turn a profit on a certain risk that carries a particular level of probability. Following this, the calculation has an effect on the monthly premiums that each individual who is insured must pay. In most cases, it's just a matter of doing the math, but insurance companies use quite intricate models to make sure they're covering all of the bases. Insurance plans could be able to help you pay for unexpected medical emergencies, hospitalization, the beginning stages of illness, treatment, and even future medical care. Having insurance provides us with a sense of security because we are aware that in the event that anything terrible occurs, the costs associated with mending it will be covered by another party. To someone who lacks expertise, this could seem strange and mysterious. For instance, if you pay $225 a month for home insurance and your house burns down after just 6 months of having the policy, the insurance company will pay to rebuild your home. If you hadn't already given them a home worth hundreds of thousands of dollars, you would have given them $1,350 instead. Why on earth would they act in such a reckless manner? This is the reason why insurance is so important. How do insurance companies work? Different insurance companies give different levels of coverage. The bulk of insurance companies will specialize in offering a single kind of coverage. This is due to the fact that each corporation must design a complicated model in order to ensure that they can generate money by guaranteeing a profit. If you assume that 1 in 100 houses burned down each year but it turned out to be 5 in 100, you'd quickly lose money if you insured those homes. You'd probably overcharge for everyone's insurance and then be responsible for those 4 more residences. There are many insurance firms, ranging from car to health to life to homeowners, and the majority of people have these basic insurance plans, some of which are legally mandated, such as vehicle insurance. However, you may be asking why you wouldn't simply save your money each month and deposit it in a bank account. That way, even if nothing goes wrong, you'll have a lot more cash. While this is true, you are the one who is exposed to the danger. If you set aside $225 every month for a year to save money on house insurance, you'll wind up with an additional $2,700 at the end of the year. However, if your home burns down next year, you'll be out of pocket for the several $100,000 it will cost to repair it. If you think that's a risk you're willing to accept, it probably isn't. As a result, purchasing insurance is usually a wise idea. It transfers all of the danger, concern, and financial load to a much bigger corporation that can afford it. When you think of insurance as a method of paying a corporation to take on your risk, you can see how insurance might theoretically be given on almost everything. Are you afraid that when toasting a cinnamon raisin bagel, your toaster may overheat one of the raisins, causing it to explode into spontaneous plasma and obliterate your whole cupboard full of Lucky Charms and baked beans? Although it is very particular, someone could probably insure you for it. Similarly, if you're really gorgeous and are concerned that if you fall just once, you'll smash your head, lose your attractiveness, and become miserable since no one will like you anymore, someone could definitely cover you for that as well. This is also not far from reality. Since their image is a source of money, celebrities routinely get sections of their bodies insured. However, there are a few more elements to the jigsaw to be discussed, including reinsurance and insurance claims. If you like this video, don't forget to like and subscribe to the channel. Reinsurance. Reinsurance is a procedure in which one entity, the reinsurer, assumes all or part of the risk covered by an insurance company's policy in exchange for a premium payment. To put it another way, it's a kind of insurance coverage for insurance firms. An insurance business recognizes that they are too reliant on house fire insurance, especially as the summer approaches. They may take out reinsurance plans on their insurance policies to protect themselves from large losses in the event that all of their homes catch fire due to the global warming or other factors. The reinsurance agency is an important consideration. If an insurance company insures everyone in Florida's automobiles but the storm destroys them all, the insurance firm may owe more in claims than they have. If they run out of money, no one would be willing to pay for their wrecked automobile. Reinsurance is required and vital in order for insurance firms to be profitable and stable in order to pay claims. Insurance claims. An insurance claim is a policyholder's official request to an insurance company for coverage or reimbursement for a covered loss or policy event. The claim is verified by the insurance company or denied the claim. If the claim is allowed, the insurance company will pay the insured or unauthorized interested party on the insured's behalf. If you have automobile insurance and show them a smashed car, the insurance company will look into it to make sure you didn't crash your car on purpose to collect the claim. If they find out, it's considered fraud, and you might face prison time for falsifying insurance claims. It happens on a somewhat regular basis. People view it as a means to either obtain a large cash windfall or get out of a vehicle or housing payment that they can afford if they're in financial trouble. Car insurance companies, on the other hand, use top-notch investigators to ensure that they don't make erroneous reimbursements. So, as you can see, insurance is a major market where you can earn a lot of money if you have the appropriate models, assume the correct sorts of risks, and have skilled investigators to make sure you aren't cheated. On the other hand, if you acquire insurance and something awful occurs, it may save you a lot of money. Insurance is, in most situations, a win-win situation for all parties concerned. It earns firms a lot of money while also allowing people to be less concerned about unpleasant situations. That is, in essence, how insurance works. Thank you for watching. I hope you have learned something from this video. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye.